Ladies and gentlemen, welcome. My name is Peter Oluoch. I teach people about the stock market. I teach people to invest, to save in the stock market. My aim is simple: to help all of us grow rich, to help all of us grow our income, to help all of us be comfortable. And today's topic is 5 golden rules of investing. I'll be sharing with you the wisdom from Robert Leach. He wrote a book, How to Make Money on the Stock Exchange. And the golden rules is this. One, only invest spare capital. Only invest spare money. Someone asked me, can I go and borrow, then come and invest? Because, in this channel, I'm telling people that you can grow rich. And in my Telegram channel, and by the way, you need to join my Telegram channel. The link is below in the subscription. I'm telling them you can make 10% per month by buying share A, share B. You buy, sell, make 10% per month. And you repeat that times 12 months and make 120% per year. Actually, that's what we are aiming at. So someone asked me, can I then go and borrow 1 million, for example, then I come and invest and I double it to 2 million. Theoretically, you can do that, but it is very dangerous. Why? Because you see, you can buy share A, for example, when it's down, thinking that it will go up. Unfortunately, it can still go down. So you can borrow money. After borrowing money, you think that now it's going to go up and gain profits, but the money doesn't go up, or rather the share doesn't go up, the share drops, and so your money gets reduced. And with loans you must pay back, and there's interest to be paid. So there's this pressure that builds up within you that you need to make money quickly so that you pay the loan. But the stock market is not like that. You cannot push it to, cannot push the shares to rise quickly so that you make profits quickly so that you can make money. That's not possible. And so the pressure to pay back the loan forces people to make decisions that are not rational. And so one of the golden rules of investing is one, use your savings. Use spare capital. That is the message from Robert Leach. The other one, he says that before using real money, you can do a dry test on an imaginary portfolio. Well, this happens a lot in Forex. They give you a dry run with some dummy money. Well, in the stock market, there's no dummy money, and doing a dry run is not very possible. But what I tell people is this. Before you start investing big money, let's say 100,000, you can start with 10,000 and see how it goes. Instead of buying, like, let's say 10,000 shares of Absa Bank, you can buy 100 shares of Absa Bank and see how it goes. You can risk 1% of your money or just 10% of your money and see how it goes. Don't invest all the money in one stock. Don't invest all the money in one counter. Don't invest all the money in the stock market, for example. Use a bit of it, a small portion of it, and test how things go until you learn the ladder, until you learn the ropes, until you learn the system very well of how it works. Then you can put in as much capital as possible. The other thing that you need to do, Robert Leach says that commit a certain percentage of capital. He says you can commit a third until you feel more experienced. And this is very important. One of the richest men in the world, and this is Warren Buffett, says that you cannot test the depth of a river with both feet. If you test the depth of a river with both feet and the river appears to be deep, then you will drown, my friend. You may die in the river. And the stock market is like a raging river. In fact, it's sometimes called a raging bull. Stocks can go up very quickly, very fast, and you get excited. And as you get excited, you don't know that on the other end, there are also the raging bears. And when a bear finds you, especially a bear with young cubs, it can finish you. And so this is the stock market. It's both exciting and also dangerous. You can make money and can also lose. So what does Robert Leach say? Robert Leach says that use a portion of the money. He prefers to say a third of it. The other thing Robert Leach says, and that is the third rule. We have done three so far. Invest spare capital. Two, before you use real money, use imaginary money. But I'm telling you, you can use little money, 1% of your capital. Three, he says you can commit a small portion of your capital. Now the fourth one is he's saying that buy blue chip companies until you feel comfortable enough to do speculative investment. Blue chip companies in Kenya, like Safaricom, is a blue chip company. Equity Bank, KCB, they are blue chip companies. These are the most well capped companies. These are the companies with, let me say, they are stable. They have been there for a while, for like 10, 20 years, you can say, for example. And they have assets with over 500 billion in assets. These are companies that are stable, have good capital base. Their balance sheet is rock solid. They give dividends, for example. Invest in these companies. Let me say you can invest in the top 10 companies in the Nairobi Securities Exchange. Safaricom, Equity Bank, Barclays Bank, Coop Bank, BAT, East African Breweries, ABSA, and such. You can invest in the top 10 companies in the Nairobi Securities Exchange. The other rule that is saying that do not feel proprietarial about shares. You may get a great kick out of knowing that you own so much of a particular company, but do not let this prevent you from selling the shares. Many people have lost money and opportunity of making it by holding on to shares for sentimental reasons. Let me say this. Never marry shares. Never marry stocks. Let me say this. Getting emotionally attached to stocks is very dangerous. Let me give you an example. In the year 2005, not in the year 2015, 2016, thereabout, 2013, 14, 15, thereabout, Nation Media Group was 330 shillings per share. Then it started dropping. If you are held to Nation Media Group for sentimental reasons or any other reasons, the share dropped from 330 to 300 to 250 to 200 to 100 to 50 to 9 shillings. Your 1 million shillings reduced to almost 50,000 shillings. The stock market is a landmine and you can lose. So don't hold on to stocks for sentimental reasons. If it starts dropping, sell. If it starts dropping, sell. The other thing you need to remember that you have not made a profit until you have cash in your hands. You know, some people say at I bought equity at 10 bob, now it's 40 shillings, 50 shillings, I've made money. You've not made anything. You only make money when you sell. So my friend, sell, then hold the money in your hands. Hold the cash in your hands. For you know what? It can drop from 50 to 20 to 10 to 0. Companies are never 100% stable. They can be very, very shaky. Take Mumias, for example. Mumias was 60 shillings, now it's 0. Kenya Airways was 147 shillings, now it's 0. Companies can be very, very shaky. At the River Mining was 95 shillings, now it's practically 0. So, you've not made any profit until you have sold. So, develop this habit of selling shares and having cash in your hand. Mbesha or TAS, Manyonge. Have it in your hands or in your pocket. That is when you have money. You don't have money by having it there in the stock and you've not sold. No. Sell. The other thing you need to do, don't grieve over losses. If you've made a loss in, say, stock A, stock B, stock C, don't grieve over it. Move on. Look, the stock market is a market like any other market. And in the stock market, every day is a new opportunity to make money. So if you keep grieving over the previous losses, how will you make money going forward? Every day is a new opportunity to make money. Every day is an opportunity to make money. So every day is an opportunity for you to write back the wrongs of yesterday and live today and try to make money today. Don't grieve over the past. The past is gone. Yaliyondwele sipite. Ama yaliyopita si ndwele. Don't grieve over the past. We are marching forward. In this channel and in my Telegram group, if you are new here, join my Telegram group. That's why we are growing together as a team, as a group. Our objective is one. Save 10,000 shillings per month, times 12 months, 120,000, times 5 years, 600,000. But in the stock market, it will not be 600,000, it will be 1 million. Why? Because we are buying shares, selling, buying, selling, buying, selling, buying, selling, and growing our money over time. Thank you very much. If you're new to this channel, subscribe. If you like this video, give it a thumbs up. Asante sana. Bye-bye. God bless you.
Au revoir.